What's up, investing legends? Today we welcome David Holman to the program. Dave is a multifamily investor and developer who has carved out a powerful niche in workforce housing and unsexy Class B and Class C assets, with projects ranging from small residential to office and even hospital conversions into apartments. His whole philosophy is simple: do well by doing good. Serve working families, protect downside, and let the wealth compound quietly in the background. To kick off the episode, we unpack why Dave deliberately avoids sexy investments and instead leans into underdog assets that actually pay the bills in the good times and the bad. We talk about his journey into workforce housing, why he roots for the underdog, and how his early days with limited capital forced him into the very niche that now gives him both purpose and profit. Later on in the episode, Dave and I dive into his slow sequential progression as an investor, starting with single DIY single-family homes and eventually becoming a GP on a 183-unit new construction deal. He shares some of his wins, but we also get into some of the uncomfortable stuff that most people gloss over: unexpected capital expenses, pausing distributions, saying no to opportunities, and why learning to fire the wrong team members is just as important as hiring the right ones. And finally, we wrap up the program with Dave talking about the democratization of access to private deals and why he chooses to utilize 506B as opposed to 506C offerings. So if you're tired of chasing sexy trends and you want to build real wealth in boring but beautiful assets that improve communities, this episode is going to hit home. So without further ado, everyone, let's welcome to the show, Dave Holman.
Welcome to the Investing Secrets Podcast.
Dave, welcome to the Investing Secrets Podcast.
Thanks for having me, Danny.
Yeah, this is going to be a lot of fun, man. I'm excited to learn a little bit more about you and your journey. And you know, right now you're focused primarily on workforce housing, Class B, C. I'm wondering how someone kind of finds their way into that niche, because it is a niche within the multifamily sector, right? We don't see, it's not like, it's definitely not sexy, right? So it's one of those things where I think people kind of have to find their way there and kind of like claw their way there almost, right? So I'm wondering what got you to where you are right now with the workforce segment.
Yeah, that's a great question. I always kind of like to root for the underdog. And when anything is like really popular or sexy, I try to steer clear of it. That's just like a character trait, I guess, of mine. And maybe it means I miss out on hot markets or deals or types, but I think it does tend to keep things safe. You know, I've never gone bankrupt. I'm not planning to, and I'll knock on some wood as I say that. But yeah. I think that I love the ethic of service to, you know, working people that need better housing. And that's what I'm trying to provide for them and yeah, you know, kind of well by doing good. But, you know, I'm also developing, you know, projects that are a little bit sexy now. So there's a little bit of a sex appeal, you know, that I've come to. But I started that way because that was what was cheap. You know, like I didn't have a lot of capital when I got started in this game, you know, maybe 10 years ago. And I was looking for things I could afford. And that means you have to start with Class C. You can't buy a Class A asset when you're just starting, you know, with limited capital and experience. And I took a very slow sequential progression. You know, I started with one single family house that I personally sourced and managed and, you know, did a lot of the maintenance on. It was a, you know, complete, you know, self-driven DIY investment to the point now where I'm a, you know, general partner at GP on 183, you know, unit apartment new construction deal, and I'm not DIYing anything. So, but I don't think that's where you start. You know, you have to learn as you go along and build credibility, you know, with investors, with team members, and find the right niche for you, you know, along the way. And yeah, I like the unsexy stuff, you know, the HVAC companies, the landscaping, the boring stuff that pays the bills. And you know, that when it's a bad economy, that's suddenly going to be the sexy thing. You know, I know AI is really sexy right now and NVIDIA is the sexiest girl at the prom, but when that bubble pops, you know, our stuff is going to be the sexy asset.
No doubt. And, you know, my business coach, my very first business coach actually told me something when I was probably about 26 when her and I started working together. And she pulled me aside one day and she said, "Danny, do you want to be sexy or do you want to be rich?" You know, and I just kind of like stared at her. It's like a 70-something-year-old lady. tiger, just an absolute shark of a woman, dude, you know? And she like made me realize, you know, that in business, and there's a lot of parallels here, right? There's in business and investing, and so there's so many different verticals that you could apply the same thought process to, or apply the same principle to, which is it's really difficult to be sexy, right? And do the things that are sexy and then also be rich, right? So you can invest into something that seems very sexy at the time, but very rarely do those investments actually turn out to be lucrative investments, right? Same thing in business. You can overspend to make yourself very famous, but that over expenditure is going to inevitably lead to you not being rich, right? And so not creating the wealth for yourself. So there's so many different verticals that you can apply that principle to.
I totally agree. I think that, you know, the flashy, shiny object is very tempting because it's cool. But it's also, you know, high risk, high reward. There's boom and bust. And, you know, that's the kind of thing you need to do with house money you can afford to lose. You know, then you can, you know, go sexy. And I've bought, you know, the altcoins or whatever investments, you know, that I could afford to lose. And sometimes they do really well, and that's great. But, you know, those are kind of asymmetric bets that you want to take with 5% of your liquidity or net worth, not 50. Unless you're a real gambler and you don't have a family and you don't mind going bankrupt and eating, you know, macaroni for a year as you recover. And I do have a family, and I do want to take it kind of slow and steady. You know, in my career, I like, you know, getting a good night's sleep and not, you know, fearing that the sky is going to fall, which inevitably everyone's going to have some stressful nights no matter what you do, I think. But I try to keep it pretty reasonable, which means that a lot of people come to me with deals and partnerships that I could probably make money on, but I'm not interested because I don't want to overload my plate. And I just had one this morning where, you know, there's a 200 unit site that a friend wants to sell me, and I could easily be the guy developing that site, but I would be stretching myself thin, and you have to learn to pick your battles. I think it's much harder to say no than it is to say yes.
100%. And I honestly believe, and this is something that this is a theory that I've kind of, I'm not a theory, but this is something that has become ever more clear to me, like over like the last couple of years, which is the success of an entrepreneur has very little to do with like how talented or how smart they are, right? It's actually because a lot of entrepreneurs, a lot of us, we're wired in a way that makes us magnetic people, right? People are like naturally drawn to us. People are natural. Most entrepreneurs are talented, right? In some capacity, or else they wouldn't have the guts to kind of go out there and do it on their own. I think most entrepreneurs though are artists, right? By nature. And we can, that's a broad term, right? Not necessarily like saying like, hey, we draw, right? Or like we sing or play an instrument, but we're artists, we're creatives. And the issue with that is that most creatives can't say no, right? Because every idea sounds like a great idea. And we see the great in everything. We see the possibility with everything. And so that's exactly what you're saying, right? Which is once you get to a certain level, the opportunities, you're no longer looking for opportunities. You have more opportunities to say no to, right? Than most people would ever dream of even having. But that's just the curse of a successful entrepreneur. And that's why most of them fail, right? Because they get, they get shiny object syndrome, and they wind up overloading themselves. And I've seen a lot of friends do that. And I've done my best to stay disciplined and stay one track minded because it's really hard to say no. It's really, really hard to say no.
100%. I take a lot of my kind of leadership and business advice from Tom Brady, who, would give these talks after the games. I'm a New Englander. I'm a Patriots fan. Y'all can hate on me now in the comments or what have you, but we're back, baby.
Drake May's looking pretty damn good, man.
I'm alienating the entire.
I'm sitting here and I'm like, shit, this is TB12 all over again. So yeah, anyways, but
I think Brady, that there are many lessons to be drawn from sports, and the lessons are not that you need to be the most talented, smart, athletic person in the game the lessons are that it's all about the team, and it's the coaching, and it's the team building. It's the intangibles of assembling a group of people whose strengths and weaknesses complement each other and can work towards a common goal. Because any one entrepreneur, the solo entrepreneur DIYer that wants to have everything be coming from them and can't let go is not a team player. And I think business and life and certainly real estate investing is about teamwork. And, that's what I've kind of drawn from, the football and other sports, that I follow, is that even solo sports where it's one athlete, I'm a runner, so I follow running, even those people, there's a whole team around them, coaching them, helping them, mentoring them. Like you have business coaches. And that is one of the keys to success, is not thinking that you're the best and you're smarter than everyone. And I think some of the best leaders are the ones asking questions of their teams and of the people around them, and are deliberately almost feigning ignorance to get input rather than thinking, I know best, here's what I'm going to do, my way or the highway, which can be right, but it can also be really wrong. And sometimes other people kind of see you better than you see you at times.
Yeah, no, absolutely. And it's interesting, man. I actually think Brady sucks in the booth. I think that his true calling in life right now is to be a performance coach. Whenever he gets on a stage and talks about business or performance, like, this guy's such a savant because he performed at the highest level for so long. I'm like, dude, like, what are you doing in that booth, man? Like, I mean, I know like like he got paid a lot of money and everything, but like, honestly, every time that he gets on a stage and he talks about business, I'm like, this guy's amazing.
Yeah. Yeah. He's not the GOAT of broadcasting. We can all agree.
Not yet. Yeah, not yet. Well, I mean, we'll see. He also could, he could get there, but who knows,
he
right?
started terribly. I mean, everyone was criticizing him. And I think one of the attributes that I really admire in him is that drive to learn and to study. I mean, he's a student. He's a lifelong learner. And, he took a very academic approach to being a quarterback. And I think he's taking that same approach to broadcasting. He's not at his GOAT level there yet, but that work ethic, I think, is really key, because I think that we can succeed based on talent or good looks or whatever, belies the work behind it that I think is really necessary, and the learning, because there's so much. That's what I love about real estate, is it's just this ungodly complex, giant tent field that's everywhere and everything. And we can learn all day and still have a ton more to learn. Yeah,
no, I completely agree. I so much to love about him. And, people can hate on him all they want, but they're just jealous at the end of the day. He's incredible.
Yeah,
so,
I there's a lot to admire in his character, and it was easy to hate on him because he was the quarterback beating your team. But when I listened to him speak in his press conferences, he never put anyone down, ever. He always was complimenting his teammates. He was congratulating his teammates. He was never taking credit for things as an individual. He was constantly, with every word that came out of his mouth, thinking about, how can I, motivate my team and share, our success with them. And I really admire that, because I think that's hard to do. It's hard not to brag. Right. And
right.
During his career, he didn't do that. Now he's getting a little bit, but it's even, he can make fun of himself. And I think that's very important for people. We shouldn't take ourselves too seriously.
Yeah, 100%. That roast was awesome. It's so much fun. But yeah, man. So I want to actually come back to this, Dave, because we glossed over it at the beginning, and it's a path that obviously we see a lot of real estate investors take, which is you start small with the residential single family, and then eventually start to graduate up. What is it that you learned in starting with the small stuff? What were the skills and the principles that you learned by starting small that translated into helping you succeed as a larger multifamily investor?
Great question. The answer in my mind is that to be a good boss, it really helps for you to have done that job. And it's much harder to be a good boss when you never worked the positions that you are now in charge of leading. So for me to start small, I was the leasing agent. I was the handyman. I was the property manager. I was the real estate agent. I was also the client. Like everything was coming to me. And you can do that when you have, 10, 20 units or fewer. You can kind of do everything yourself. And there's a huge amount of learning that comes from that. And it helps you be able to kind of speak fluently to the future handyman and leasing agents and managers about what they can be doing in your style of how you would recommend, doing it. And also understand that, oh, hey, this leasing agent's way better than I ever was. I should be the one learning from them. But I think that is what helped me by starting small, was getting my hands dirty, doing everything directly and appreciating the time and effort and difficulty involved. And that means sometimes I'm like, dude, this isn't hard. Just get it done. And other times I'm like, ooh, this is going to be really tough. This is like a 10 or 20 hour, project. It could be really expensive. Like we need to think carefully before we embark on this.
Is there a part of you that wishes that you had just gone straight to larger multi?
Yes and no. I think, that like if I listen to Grant Cardone, who would, slaughter anyone that doesn't start with 40 or more units, and you just got to immediately go big or go home. And part of what I love about real estate is like, that's a good strategy for some people, and that's not a good strategy for others. And I think it comes down to personality, what you're comfortable with. Like, is that going to have you, generating ulcers at night, or do you have a lot of mouths to feed and you can't farm, on one deal? I've always been kind of like a value investor mindset, a dollar cost averaging mindset, where like, I don't want to shoot just one bullet, in my career. I want to sequentially layer in step-by-step, investments that can build on each other. I think when you go out and raise capital, and you're raising much more of it than me, so tell me if I'm off base here, but, success builds on success. And, when you have happy investors and people that you've connected and seen, pleased with the work you've done with their capital, that in itself will help you get the ball rolling. But to go and try to pull off, if I had gone straight to, the 63 unit syndication we just did, the banks wouldn't have let me be the guarantor. That I would not have had the credibility, I think, to pull that off. Sure. And now I'm guaranteeing things that, like, really, you're going to let me do that? Okay. I mean, I'm being a little facetious, but it is amazing what you can do in a few years' time. And I personally would encourage people, like, it's tempting to try to fast forward and just take down the biggest bear in the forest. And I would say, like, start with a different animal, and work up to the bear. It doesn't mean you have to take 10 years doing single family deals before you ever do a multi or whatever. But I do think that it helps to partner with people who have more experience, learn, get your hands dirty, crawl before you walk, before you run. That's my philosophy. But again, it can work the other way around. And I'm not saying that someone's necessarily wrong if they want to go, from couch to marathon. Like, I've seen it done. It can work.
Well, I've heard people say it both ways too. I've heard individuals who, were in your spot and say, I'm super grateful for all the learning and everything that I did. And exactly what you just said, right? Where you felt like it served you. And then others who are like, man, I wasted 5 years of my life, right? And I think it comes down to individual experience, and whether or not those first 5 years were like actually fruitful, or whether or not they were just, it was like a lot of pain and agony and a bunch of doors closed on you. And all of a sudden when you started playing in the bigger leagues, because it happens sometimes, right? Like some people they're not fit for the minors, but they go to the majors, they crush it. Right. And then other people, it's like, hey, no, I every step was worth it. And it helped me kind of become the investor that I am today.
Yeah, I'm very happy with the pace that I've moved at. What I would change, what I would say to my 18-year-old self is start sooner. I'm not saying go faster, but I do think starting sooner, it's not timing the market, it's time in the market, right? And I think every decade that you can buy and hold assets is probably going to be a decade very well spent. And if you miss 2 or 3 of those in your middle age and you're just starting at 50 or 60, That's better than nothing, for all the older, and middle-aged folks listening, like go for it. But if you can mentor and talk to someone in their 20s, if they can even buy like a mobile home, once every few years in their 20s, like they'll be stinking rich by the time they're in their 40s if they keep that up. And I didn't do anything until my mid 30s. So, I could have started earlier.
So let's go back to that time, because I don't think we've really discussed it, and I'd like to kind of hear the backstory. So what were you doing prior to real estate investments?
A pretty standard path in life, Danny. I had started a camping store chain in Bolivia, like most folks listening. And, it was also sold books, multilingual books and maps. And I made some of the maps, with graphic designers. I had fallen in love with a young woman down there after college. And we had to figure out a way to make money and live down there. And so we just saw this niche in the market and started a store. And then that led to another and another. And before I knew it, I had 10 employees and a spider web of Excel spreadsheets, and I'd only had one econ class in my entire life career at that point, which hadn't really taught me much about what I was doing. So when we came back from Bolivia, we got engaged. We're now married with 2 kids, but I went to business school at that point thinking that there were all these great secrets that an MBA would unlock for me. And the great secret, folks, was like accounting and bookkeeping. Like that's what I didn't know, that to be lethal, you really need to know. You need to know how to read a P&L, how to read a balance sheet, what the implications of these different trends are in businesses. And that's sort of the lifeblood of any business, be it real estate investing or otherwise. And you don't need an MBA to do that. I loved the experience. I think it was a great time and a degree. I don't regret doing it, but that was the missing link for me that helped me get to where I am. And then with my MBA, I immediately sold out into the lucrative nonprofit space. So I helped kids in Guatemala go to school. I was getting paid 30 grand a year with my MBA. It was very fulfilling, very rewarding, but kind of like a social work job almost. And in that, I learned fundraising. I went and worked for a college doing fundraising, Bowdoin College in Brunswick. And that's when, my wife and I got pregnant, with our first child. And that kind of paternal instinct was like, ooh, I got to make money in a more serious way for this family coming to live an abundant life. I want to do it in line with my values. What's a way I can do that? And real estate investing suddenly struck me as like, wow, I can be a great landlord. I can reduce pollution. I can make, the neighborhood and the building better. And I can make a lot of money while doing that with, 4x leverage from a bank. What's not to like?
Yeah, that's a very common path. It sounds like you took the road most traveled there, Dave.
Well trodden. If anyone needs to talk about Bolivian entrepreneurial regulations, happy to chat. It's funny because that environment was both more capitalist and less capitalist than the US. It was more capitalist in the sense that in reality, everyone just does what they want. Like anyone who's ever been to a market in the rest of the world where nobody's paying any taxes, transactions are just happening completely freely, and there's no friction. Like that is the ultimate free market is they're just doing it because the government's too dysfunctional for them to be involved in a small, like marketplace with awnings and things like that. But then on the other side, all the Byzantine, like Spanish-based colonial bureaucracy and laws and that kind of stuff. I mean, it's a huge drag on the macro economy, on the bigger companies in those economies. And that's why they're often struggling, with poverty and development issues because, there's too much red tape. And I'm not someone who thinks there should be no laws or no red tape, but there's a happy medium. And a lot of Latin America, unfortunately, is stuck on that kind of post-colonial, too much regulation that makes it very difficult to do business.
Interesting. Yeah, that's, man, it's fascinating because I've never, had a lot of opportunities to explore in hotel investment opportunities overseas. I've been very resistant to the idea because every country is different, man, and every country has its own, tendencies and unwritten rules as well as written rules, right? So very difficult to excel in an international model unless you've got a big team. right? And you've got a lot of people that come from different areas and have market experience, and you've got a lot of boots on the ground in different areas, or the countries that you're doing business in. Otherwise, hard to do, right? Really, really hard to do. So that's fascinating, man. So you came over here and then you started investing into single families, and then eventually duplexes, triplexes, I'm assuming, right? And then at some point you say, why don't I give this like a apartment building thing a try, right? And so what was, talk to me about the very first apartment that you took down. I want to hear that story.
Well, that was a great story because it was the biggest building in the local downtown in Brunswick, Maine. It was a 4-story mixed use, gorgeous, historic building with brick and stone and a mansard, slate roof. And it was totally like derelict and vacant up above the first floor. And I naively thought, oh, we'll just do a light renovation and this will be cash flowing. And they only wanted $1 million for it. And I knew in my gut, I was like, oh, it's worth at least 2. Like these stupid sellers, like I'll just jump on this deal. And sure enough, I mean, the first day that it was available, I jumped on it and put it under contract. And I spent the next 6 months basically paying a lot of money to realize it wasn't a good deal and I should back out. And so I did the day before my earnest money went hard. So I didn't lose even more money, luckily. But I'd paid for a lot of architecture and engineering. And that was my, second MBA, where I learned historic tax credits. I learned, a lot about construction. I met all these great connections and people. And at the end of the day, it was going to be like a 2 or 3 year project to maybe eke out 7 or 8% on the back end with a ton of risk and me being brand new to that game. And I'm so glad that I failed and backed out and said no to that, because I acquired like 100 units in the next year that I never would have gotten if I was tied up in this big, complicated hairball of a building. And 5 other people after me put it under contract and backed out until a rich guy went and did the project and wasn't going to make money. But for COVID, and then it, everything kind of doubled and a lot of sins got forgiven in the real estate world. Might have been one of them. But I'm glad someone did it because it was an anchor building of the downtown. I mean, it's the kind of thing you don't want to have vacant in your downtown. But sure. I'm really glad that someone wasn't me as my first big syndication project.
Yeah, that's awesome, man. So, well, and those are the kinds of lessons that are super valuable, but also this is why a lot of real estate investors fail, because it's always like everyone comes in with rose-colored goggles. It is like it's like a disease, right? Everyone thinks real estate's easy, and we'll put like umbrella over that: brokerage, lending, investing, right? We'll kind of put an umbrella over all that. They just look at people in real estate, whether they're an investor, the outsider looking in will look at an investor or a real estate broker or whatever and be like, "That doesn't do anything," right? They just make a lot of money for no reason. No way, right? Like people have no idea. Those outsiders have no idea the kind of pain and what we experience on a daily, weekly, and monthly basis. So let's talk about the pain a little bit more. What is the most painful lesson that you've learned kind of going through what you've gone through? Like, obviously that one sounds like it was pretty painful, but like you got out from underneath it. Are there any other like painful losses that you kind of experienced in your time as an investor?
Yeah, great question. Monetary and building ones, no. We've encountered unexpected, capital expenses, and that has been a challenge because we've had to pause distributions when a building needs a new roof or needs $100,000 repairs we didn't know about and plan for and budget for. And I've handled that. I've never done a capital call. My documents don't even allow for that because I don't want passive investors to ever be forced, like an HOA, to like chip into something that the syndicator got wrong, whether, rightly or wrongly. And so I've lent those projects money, as the first step. And then I've invited investors to do that too, or banks, depending on the situation, to get through the capital costs. Because a lot of times you can't or shouldn't do that with cash flow. You need financing to do it, even if it's just a small percentage of your overall debt. And it always has been. So those have been communication challenges where, my policy is like, I'd rather be proactive and transparent with investors and say, you know what, I think we're coming into these big costs that we got to get through, and I need to pause distributions to, not have to borrow as much to get through that, and then restart them once I know that we have the financing to get through. Sure. So that, it's painful, but I also think it's a good thing to do. I'd rather do that than get in trouble, with the bank, or get in trouble, with investors who are on a ride they don't want to be on, or something like that. And at the end of the day, many of these syndications have already paid back everything or most of everything that has been put into them. And others are on that payout path that are newer. So it's not like it's a bad investment. The IRRs are all still in the double digits. It's not that as much as, we thought it was 3.2 million and it's really 3.3. But that final $100,000 only came 2 years after, we started. So that's one thing. And then I think, in the HR realm, when you're the coach of a team, you got to let go of players sometimes. And yes. I think that's always difficult. But when you're someone like me, who's like very soft-hearted and nice and wants to think of everyone as a family and forgive a lot of mistakes, like that's something I'm learning as an entrepreneur, is to be firmer and fair. But our team is not a family, and we won't forgive all mistakes. We're like a sports team. And if you're a player who keeps fumbling the ball, you will get benched permanently. So that is, I think, important in life and in business, that level of accountability. Anyone can get fired. And I don't want to fire anyone, and I hope I never have to fire another person again. But inevitably, having that willingness and accountability to do that prevents situations where I let someone stay too long, and then the whole team is unhappy with them. They're causing problems. They're grumpy, whatever, and that's worse. So I've done that. That was a mistake I've made, not one I plan to repeat. But it's an important lesson.
Yeah, 100%. People always use the word, they throw around the term, it's a cancer. Person is cancer. But the analogy that I heard that actually seems to be an even better one for what you just described is a moldy strawberry, right? You have one moldy strawberry in the basket. That suddenly, a couple of days later, every strawberry in that basket is moldy. So love that analogy and totally get it that when you're scaling a team, you're constantly faced with having to step up as a leader, right? And sometimes as a leader, you're having to do the inconvenient thing, right? Or the hard thing to do, which is, like let people go, coach them up or coach them out, right? These are things that we gotta do as leaders that a lot of people just don't take for granted. They don't even realize that it's a thing. They're like, oh yeah. So that's really cool, man. Last thing here before we move on, you've talked a little bit about raising capital, everything. I'm curious, what your current strategies are for like kind of going out to build investor relationships. Are you primarily, friends and family? Or are you do you have certain marketing initiatives to kind of bring people into your sphere? And, how do you go about doing that?
Great question. Yeah, I'm doing it with like 2 arms and a leg tied behind my back because I do 506B syndications, which is legal use for friends and family and non-accredited investors. So it would be illegal for me to publicly, try to sell a security and market a deal, whereas people that are doing crowdfunding or 506C with all accredited investors can do that. I really like 506B, not because it gives me extra money, which it marginally does, but because it's kind of democratic in a way. I don't like the elitism of this term accredited investor. I think it's BS. I think it's a way to keep the middle class and lower income people out of the lucrative, hedge fund, private equity space. And yet we're letting them gamble in casinos and do payday loans and do all kinds of things that are risky and dangerous financially. They're totally legal for people with, less than $1 million of liquid net worth outside their primary home. And so I love that idea of I can take up to 42 average people in these syndications, and they can get wealth. They can build wealth. They can get a 15 or 20% IRR on this investment that's better than the stock market. And I don't have to say no to them because they're too, ignorant or poor, basically, which is how I know that's not what, an accountant would tell us that the accredited investor rules are meant to do. It's to protect grandma from losing her savings and what have you. But I do think that is the unintended consequence of that barrier. I would do away with it. I think rules are very important. You have to catch fraud. I think the SEC and FBI and everyone else needs to catch, fraudulent activity. But to me, if we're letting poor people buy, Ethereum backed, new crypto that people are just pumping and dumping, and we're not letting them invest in my real estate syndications of multifamily workforce housing, something's wrong. Something's wrong.
Yeah, no, I don't disagree with you. I think the accredited, there's a lot of things going on right now. There's a lot of changes that are being proposed right now when it comes to accreditation standards, and you should now, or I think they're talking about maybe implementing some sort of accreditation test where, if you don't meet the income or net worth requirements, you can also test into it, which to me seems like a logically that seems logical to me, right? It's hey, there's some standard here that has nothing to do with your, because the argument is that your net worth and income levels determine your financial literacy. I have discovered time and time again that is simply not the case. There are a lot of people who meet those requirements that have no financial literacy and don't really understand anything about what we're doing, but they are somehow magically able and allowed to invest in these sorts of opportunities.
Any first-year professional athlete, boom, you're accredited. You got $1 million. You got a salary over 200 grand. You are a financial expert. Boom. And then the whole FIRE movement, the people who are listening to 4 hours of financial podcasts and banking away their savings, day after day, investing in, all kinds of index funds. No, they're too dumb. They can't, they would be burned by these complex instruments.
Right.
I just think it's an unnecessary level of bureaucracy, and I would really just do away with it. And I would go after fraud and bad actors in any asset class at any size. And I think we'll be a much better, society for that. But it's not a huge problem. I mean, it's a minor annoyance. It's one of the smaller soapboxes that I get on, in the way that things are structured.
No, 100%, man. And like I said, I think that there's some middle ground there. I mean, it's interesting, but 506B, I mean, is great. The only downside there is that you can't obviously market the deals. But what are you doing to then bring investors into your network? Your educational events, how do you typically bring those investors to come to know about you? Let's say.
Yeah, there's no one channel. I don't market per se, but I like to go on podcasts and educate people. And I give out my contact information, and sometimes 1 or 2 people reach out. It's surprisingly few. I think they're shy, but that helps. I would say 70% is word of mouth. It's referrals from happy investors, sometimes from contractors, sometimes other clients. But a lot of it it started with friends and family, and then it was friends of friends, and now it's financial advisor, a friend of your family. So. Right. It's been very organic. I've never bought a list. I don't really go out and solicit, publicly for specific deals. I mean, I solicit people to come be a passive investor with me. And once I've met you on a phone conversation or in person or something like that, we can do that. So that's been my strategy, and it's worked pretty well so far. But, as the size of my deals grow, so must my network and investor list too. So, it's important to look for new opportunities to meet people and network for sure.
Yeah, absolutely, man. Well, and speaking of that, I think that's a great segue to, should a listener want to get a hold of you, want to reach you, where's the best place for them to find you at? By the way, all this is going to be in the show notes description down below, so you can find whatever Dave mentions down below. Dave, why don't you let the people know?
Yeah, just text me on my personal cell phone, 207-517-5700. I'm not afraid to give that out. Maybe I'll have to abandon it someday if it gets too much spam, but You could also email me, dave@hullmanhomes.com. So, I've got a website, hullmanhomes.com. I'm on LinkedIn. I'm too old to be good at social media, so I'm not as frequent of a poster, but I've got a team now that's doing some of that. So, we're getting out there a little bit more. But I think I love a phone call. I love just meeting new people, talking with them, learning about what they're doing, they're investing, who they are, and if our goals align. If all you care about is making the maximum return, I probably won't be offering that best return, but I can be very confident in what I am offering. And I always do investments that make the community a better place. And I've found a surprising amount of investors care a lot about that. And they love reading in our quarterly reports about ways that we helped families with us or did improvement projects that the neighbors loved and things like that. So we're sort of like a do-gooder, outfit, but we're doing it for a profit. We're not charity.
Makes perfect sense, man. Well, we're almost up on time here, but we do have a couple more minutes. And one thing that I wanted to ask you that we haven't really talked about yet, very related to what you do and very related to what I do. It's this perfect mixture. Hotel to workforce housing conversions is a big trend right now. So number one, curious, have you looked at anything? Have you looked at any of those types of opportunities before? And what are you seeing in that particular strategy?
Great question. And Maine has had a hotel boom, an explosion in hotel building. Portland, Maine is one of the coolest, best food cities in the country. We get over 20 cruise ships now coming to that city. And it has boggled my mind, the amount of hotels that have been built, and they're still going up. So, which is to say, there have not been many unsuccessful ones that have been converted or that have been on the market that haven't stayed hotels, because we are a destination, a popular travel destination. We're not just a, Midwest working class city that, had too much hotel stock at one point. We've been moving more, and the RevPAR and all those things have been pretty good in recent years. So I don't know much about that. I do a lot, however, of office conversion to workforce housing. We just did, a hospital project where we converted a hospital to workforce housing. I'm doing one now, in the initial phases of doing, one in a downtown old brick building, vacant. Exactly the kind of project that I failed at 5 years ago that I can now do, as a 2-pointer under the hoop. It's not as hard as it seemed back then. So I think there's a lot of vacant office space in cities and towns, but it has to have windows. You can't have these giant, 200-foot wide floor plans and expect people to want to live in the dark in internal rooms. So that's the challenge, is the big office buildings really don't work for residential, even though everyone's like, oh, why not? Great. I'm like, yeah, great. If you want to live in a cave, that is totally awesome.
And we did a lot of exploring on office to hotel conversions and what the determination that we came to was that it was cheaper to demo the building and build from scratch than it would be to gut the office building and work with the existing structure, which sounds ludicrous. It sounds absolutely ridiculous that it would cost more money to retrofit an existing office building to a hotel versus demolishing it and all of the expenses that come with demoing the property and then building from the ground up. Crazy, but I have spoken to a few individuals that are doing office. I'm actually working with a group in Manhattan. I'm helping them raise capital for a couple of their projects. They are doing office to multi conversion as well. So I think, to your point, it depends on the size and scope of the building. Probably can't be this gargantuan skyscraper kind of office building, but certain office should work, right?
Yeah, I think it's all about the floor plate. If that floor plate can be made into apartments with windows, it'll work. If it's too wide and giant and big and you have all this interior space that is just going to be dark without windows, that's tough. But some places are incentivizing it, and I believe Manhattan is one of those. So there's also this whole free money from the government effect that I think is often you shouldn't let it be the tail that wags the dog, but you should pay attention. And saying no to it is sometimes not in your best interest.
Right. No, I totally hear you there. And to your point though, and something that I wanted to say or address with the booming hotel inventory in Portland is you're absolutely right. It depends on the area. And my suspicion is that probably Portland didn't have a ton of hotels developed in like the 70s and 80s, right? Nope. Like this is like an area that has had a lot of hotels developed post 2000, right? And maybe even like after the last Great Recession, right? In 08, 09.
And grungy working waterfront back in the 80s, man. We were not a popular destination. Sorry to cut you off. We were ugly. I worked on ferry boats in the early 2000s and Portland was not cool yet. It really took off in the aughts and teens. And once word got around and like every Boston and New York chef wanted to have their Portland, outpost, and it got really cool. It got really foodie. It's got these great, historic brick walkable downtown places on the water. And it's done really well. They have a lot of anti-housing policy in place, like rent control, inclusionary zoning, all kinds of barriers that people are well-intentioned, but it just decreases supply, which of course, lo and behold, increases price. So we've got some challenges policy-wise that we need to do better at, educating people the cause and effect of those things.
Yeah, that makes sense to me. And what I was going to say too is that typically the hotels that are being converted right now are the older Gen 4, Gen 5 boxes that can't be flagged any. Like none of the brands want them anymore. So they've gone through, 5 to 10 ownership changes in the last 40 years, right? And so it's just changed changed hands so many times. So those are the ones that are exterior corridor, especially, right? Like exterior corridor kind of like assets as well. So if you don't have a lot of those in Portland, then or in Maine, that does not surprise me that you probably don't have a lot of that strategy going on. But in 30 years from now, maybe.
I think you called the market exactly, which is Maine and Portland. They had little mom and pop motels and small places. So there's not that many. I've seen a few conversions, but I mean, 1 or 2, and I'd love to do one because I think the opportunity is great. If you have plumbing, to every unit already, I mean, that's like half the battle. And if they're already with windows and the right kind of sizes, you're just 2 hotel rooms per apartment or something like that. It can really work. I saw a student housing to workforce housing conversion of a large building in Portland recently that was very interesting. And that worked out pretty well as well.
That's awesome, man. Yeah, no, really, really interesting stuff. And it's a great sector, but like you said, right? Like it's maybe it's not sexy, but I can assure the listeners back home, I've seen enough of these deals to know that they are quite lucrative if they're done correctly. So Dave, tip of the cap to you, man. It was great chatting with you. Had a really, fun time chopping it up, and best of luck to you, man. This is, it's a great time for this strategy. So I'm excited to see what you do next.
Awesome, Danny. Well, we're going to do a hotel in Bolivia together. That's the next investment.
Off we go. Yeah, it sounds, sign me up, baby.
Thank you so much.
All right. Yeah, you take care, Dave.